called Cloudflare. Here's a company that helps businesses run their websites, make them more secure, enhancing their performance, and rolling out a bunch of different content delivery services into one seamless platform. This is exciting.
So Cloudflare is the service that makes the modern cloud possible. And so at Cloudflare, what we did is build one of the world's largest networks. We're in 200 cities worldwide in order to solve those problems.
Piper is just a millstone around AT&T's neck. I say dump it. Dump it now.
My name is Nelson Baghetti, and I'm the president of Stanford. You graduates have a lot of responsibility. Finishing.
Why I think Cloudflare stock will be the next Palantir. What does Warren Buffett think about the moat of NET stock versus Palantir stock? Speculators make money for their brokers. Investors make money for themselves. Cloudflare is Silicon Valley's cybersecurity stock that powers AI.
I'm the co-founder of Newell Road Strategic Technologies, one of the largest cybersecurity firms in the Bay Area.
I am the co-founder of Newell Roads Strategic Technologies, one of the largest cybersecurity.
I just said that. You heard me say that.
In the Bay Area. Things are better when I say them.
Most recent 2 weeks, we have seen around 50% investors are bullish. We are seeing Roku stock. Cathie Wood stock went up 30% in a day. At the same time, we are seeing the bond market TLT is going lower, potentially retesting the October low. We are seeing the dumb money sentiment going through extreme exuberance. That's not a good sign for the stock market. A pullback might be coming, so you can buy the dip later. Don't be FOMO. That's a weakness. A weakness finance YouTubers like Jeremy LaFufu and the Wall Street love to exploit.
Well, howdy there, folks, and welcome into today's video. Hope you guys are doing great out there. As always, check it out. The chef, okay, tattooed chef, $986,000 position. What are my biggest stocks for upside potential in the future year? Tattooed chef, okay. This is a company in the plant-based food space that is rapidly growing. I think they're going to be able to grow double digits revenue growth for the next decade, essentially. There's no doubt in my mind that they can just boom, 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 boom. Oh my gosh, like you're going to become a food giant.
What separates an investment to a speculation? It's often decided by the moat of a business, the competitive strength of a business. In this video, I will use Warren Buffett's method to decide how wide the moat for Cloudflare and Palantir are. Why Cloudflare will be the next Palantir. I will explain it all right after this.
How you like that? How you like that? Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true. You want to join the Audacious Money Witch Club, don't you? Cloudflare's mission is to help the world build a better internet. Cloud, like AI, is the future. Cloudflare is easy to use, flexible and scalable global cloud platform with serverless hybrid cloud architecture. Unlike Palantir, which only works with Western nations, Cloudflare operates at massive global scale, including China. It blocks over 100 billion cyber threats per day. 47% of the revenue comes from outside of USA. I still can't believe my Palantir position has went up so much. Now Palantir is a $40 billion company. Cloudflare is just half of that. If you want to see my every move in my stock portfolio, go to my website after this video. You will receive a free gift if you go to my website. Capitalism is brutal. If you invest, you must know how to identify a moat. Here are the financial rules of thumb that Warren Buffett uses to tell if a company has one. Today I will use it on Cloudflare and Palantir. Gross margin, you can find it in the income statement. The formula is gross profit divided by revenue. Moat, consistently above 40%. No moat, under 40% and volatile. Cloudflare gross margin is consistently above 75%. Palantir gross margin consistently above 77%. Buffett's logic. A consistently high gross margin signals that the company isn't competing exclusively on price. A high gross margin also provides ample gross profit to pay expenses and leaves money for shareholders. I think both Cloudflare and Palantir has an impressive gross margin. That's a good start for their moat analysis. Sales, general, and administrative expenses, you can find it in the income statement. Formula: SG&A divided by gross profit. Moat, consistently under 30%. No moat, over 80% and volatile. The most recent quarter, Cloudflare and Palantir both got over 80%. Which put them in no moat category because these business is not making a lot of profit yet. Buffett's logic: wide moat companies don't need to spend a lot on overhead to operate. No moat businesses do. Buffett looks for companies that consistently spend under 30% of their gross profit on SG&A. I guess both of these businesses haven't reached a wide moat just yet. They are still growing their sales team as these two are both long duration growth stocks. Depreciation expense, you can find it in income statement and cash flow statement. Formula is depreciation divided by gross profit. Moat, consistently under 10%. No moat, volatility, and high. Cloudflare has around 18% depreciation expense. Palantir has around 5% depreciation expense. You can say Palantir has a moat, while Cloudflare still doesn't yet. Buffett's logic: if depreciation is consistently less than 10% of gross profit, it's a sign that the company doesn't need a lot of capital expenditure assets to maintain its competitive advantage and has a moat. Interest expense, you can find it at income statement. Formula is interest expense divided by operating income. Moat, consistently under 15%. No moat, over 50% and volatile. Both Cloudflare and Palantir had a negative operating income until the most recent quarter. Palantir just turned a small positive operating income. Palantir interest expense is at 31%, which is in between moat technically. Cloudflare doesn't have a positive operating income, so it's not yet applicable to this test. Buffett's logic: great businesses have such wonderful economics that they don't need to rely on debt, While this number varies greatly from industry to industry, it's a great sign if a company consistently spends less than 15% of its operating income on interest. Cloudflare does have $1.5 billion of debt, while Palantir has no debt. That's why the stock price went up. It's because of the numbers. The numbers are there. That's why Wall Street is loving it. Buffett's logic: wide moat businesses make so much money that they are consistently forced to pay their full share of taxes. I believe Cloudflare will be profitable in the future. They are growing literally twice as fast as Palantir right now. It's just not their time to shine yet. Palantir is at the right time doing the right thing and singing the right AI songs. Palantir is actually using Cloudflare, according to Matt Prince, Cloudflare CEO.
There were others that did miss. This was an excellent quarter. I found myself thinking, okay, maybe Matthew will come on and say, you know what? I have to do a pivot. I have to just say, right now, I can have a profit, and I must show that profit.
And we've committed to being free cash flow positive for the second half of the year. This is a business that can throw off a ton of cash, and we are optimizing it over the next period of time to make sure that we can deliver that. And that's what we're really looking for, is how do we make sure that we can continue to generate cash to be in control of our destiny. And that, in combination with the more than $1 billion that are on our balance sheet, gives us a really incredible position to not only continue to invest in our business, but really take share in the difficult economic times that we're in the middle of.
Profit margin, net margin, you can find it at income statement. Formula: net income divided by revenue. Moat: consistently above 20%. No moat: below 10%, negative and volatile. Both Palantir and Cloudflare has a profit margin of below 10%. Cloudflare is at negative 13%, the most recent quarter. Palantir is at positive 3%. They are both in no moat category, according to Buffett. Buffett's logic: companies that consistently convert 20% of their revenue into net income likely have a moat. If this number is under 10%, negative or volatile, it's an indication that competition is fierce. There's plenty of nuance between 10% and 20%. I guess they both have a lot more work to do to widening their moat on their profit margin. Capital expenditures, you can find it in income statement and cash flow statement. Formula is capital expenditures divided by net income. Moat: consistently under 25%. No moat: consistently above 75%. Cloudflare obviously has a negative net income. Its capital expenditures is at 59%, the most recent quarter. Palantir is at 28%, the most recent quarter. Cloudflare is growing twice as fast as Palantir, thus they need to spend more to grow. Buffett's logic: capital expenditures eat into profits. Companies that don't have to spend big on capital expenditures have more money to reward shareholders. Important: capital expenditures can vary greatly from year to year. Averaging the result over 10 plus years is best. Total liabilities to adjusted shareholder equity, you can find it in balance sheet. Formula: total liabilities divided by shareholder equity. Moat: below 0.8. No moat: over 2. Cloudflare is sitting at a ratio of 3. Palantir is sitting at a ratio of 0.3. I guess number speaks for itself. Palantir wins again. Buffett's logic: wide moat businesses finance themselves with profits, not debt. However, stock buybacks can throw off this equation. Adjust for this by adding back any treasury stock to the shareholder equity number. Return on shareholders' equity, you can find it at balance sheet and income statement. Formula is net income divided by shareholder equity. Moat consistently above 15%. No moat below 10%, negative or volatile. Cloudflare has negative net income. Palantir, the most recent quarter, has a return on shareholders' equity of 0.6%. Both under no moat category, because both businesses are growing. They barely have any net income. Even Tesla, my Esla, has a return in shareholders' equity of 5% in the most recent quarter. Google is at 7%. Microsoft is at 10%. Buffett's logic: return on equity shows how effectively management is reinvesting its profits. A number consistently over 15% indicates that the business has a moat. Under 10%, negative or volatile, indicates that the business is struggling with competition. Although some of these Buffett's rules shows Cloudflare and Palantir doesn't have a moat, just note these businesses are just at their growth stage. You can see why Palantir stock price gets rewarded handsomely just because they improve on their numbers. I have confidence Cloudflare's management will do the same, if not better, because they are serving a wider client base. That's why I believe Cloudflare will be the next Palantir stock. You are such a good boy for watching my video right till the end. Bye.